We know that the travel outlook is going to have a huge impact on these sectors. We've got with us Gilda Perez-Alvarado, who's the global CEO of Hotels and Hospitality for JLL. Gilda, it's always good to check in with you. This is a milestone moment. So we've talked through this pandemic about how the sector was doing. Is this a watershed? I mean, is this sort of the beginning of the end for the industry, certainly when we if we're talking about across North America, across the U.S.?
This is the booster that we were looking for. And by the way, I mean, listen, it's been a story of two halves right now in the U.S., with markets that have been very heavily dependent on national or domestic tourism doing very well, particularly markets like Florida. But a market like New York City, which is so heavily dependent on international, this is the booster that we were waiting for. So, you know, I'm today attending the NYU Hotel Investment Conference. I can tell you the enthusiasm and, you know, welcoming of this news today is just great.
So much enthusiasm. Is there the supply side to sort of welcome it at the moment, Gilda? We're hearing and seeing and experiencing the lack of labor at the moment, the shortages upon every sort of restaurant industry, customer-facing industry right now. There is a sign up saying help needed. Are the hotels able to welcome these guests?
You've hit the nail in the head. This is the biggest challenge, the biggest headwind that we have as it relates to hospitality. So this is not a demand issue. I would say demand is coming back at the strongest we've ever seen. It's probably going to be a new renaissance, if you will, in terms of travel and tourism. It is the shortages of staff that we have. And, you know, we're right now competing with gig workers right now. You know, Amazon is announcing great pay per hour wages, flexibility. And so I do think it's time for a lot of these hotel companies to rethink how we're going to attract labor back into the system. This is the biggest hurdle that we have. I can tell you I'm at the Marriott Marquis right now. The business is flowing. It's booming. It feels really good. But you do notice the shortage of labor, for sure.
And certainly when we look at the stocks, I was just having a quick look at Hilton, for instance, over sort of a 3-year period, it's pre-pandemic levels. So even though we're yet to get back to pre-pandemic full capacity, as you say, there are labor shortages. One of the changes we're seeing, I want you to comment on, is this changing of a metric from RevPAR, revenue per available room, to total RevPAR. What do we mean by that? What's the shift? It always makes me nervous when you see a sector saying we're going to redefine how we describe success. What are we doing here?
I think we're finally doing the right thing. This should have happened actually pre-pandemic. And so basically what we're suggesting with total revenue per available room is we are looking at every single square footage of the hotel and seeing how it generates money, right? Revenue is not just generated by selling rooms. You know, hotels are becoming a little bit more dynamic as it relates to other ancillary revenues, whether it's food and beverage, spa, fitness, you name it, right? And so the point is, as hotels are reinventing themselves to be able to provide a greater experience, they're offering more services above and beyond the room, or maybe more services to not just those, let's say, hotel staying customers, but maybe people who are going to go there by the day. And so that's why we're suggesting, and what we're hearing from the investment community, that we got to look at total revenue being generated in the hotel. The other thing to note, too, is that there's been this hotelization of real estate as well, right? So we're going to see a little bit more of the blurring of the lines in terms of using hotel metrics and other forms of real estate, and now us using, you know, measuring what the hotel itself can generate, again, above and beyond just the room night stay.
And Gilda, how are you looking at investing, therefore, to ensure you are making the highest margin, the most efficient use of capital at this moment? I mean, is it all about technology, first and foremost, if you are short of labor and wanting perhaps a slightly slicker experience when checking in, that still we're all reeling from COVID and trying to perhaps limit our interactions to a certain extent?
For sure, that's the biggest question right now in terms of how to use technology to enhance the guest experience and to be a little bit more effective. Now, we must be mindful that in certain unionized environments, maybe the adaptation of technology as a solution may not be as fast as in some other markets. But definitely, our investors are looking at uses of technology, how to be more efficient, how to do more with less, how to redefine that customer experience. And, you know, technology, absolutely, it is important, maybe not so much to replace labor, because at the end of the day, we're a human industry, right? You're coming here for the personal human interaction, but really as a way to enhance the experience. We've become very used to communicating via technology. You know, our lives pretty much are hybrid between virtual world and real world. And so it is expected from a guest perspective that your home away from home, which is the hotel, be perfectly equipped with the technology that you need to do your, you know, your day-to-day thing. The other aspect yeah, go ahead.
Well, I think this is a really important point in terms of the planning that you're hearing from the industry, because to Caroline's point, I mean, when you see a labor shortage, we know it can speed up investment in labor replacing technologies. This sector had already been working on that, right? There was already a check-in process that didn't involve human beings. And I'm curious to know, because we're talking later about the degree to which frontline service employees, disproportionately hurt, are the most vulnerable. Some of those jobs may disappear permanently because of this labor gap that we're seeing and shifts that happen on the other end of it. Employees may go away. Are you hearing that planning?
Maybe a little bit. I think job security is something that we must address as you know, hotel companies. But you know, we got to enhance job security. Maybe look a little bit on benefits, and then let's not kid ourselves. There may be a little bit of wage inflation going on. And again, this is not just in hospitality. This applies to other industries as well. But we do have to look at the labor side of the equation. This is, as I said, the biggest headwind that we have. The good thing is that, you know, with $2.9 trillion of savings amassed and people ready to get on planes and travel and spend time in hotels, I think those increased costs will be more than offset by increase in revenues just from this amazing wave of demand that we're seeing and that we will expect to continue to see going forward.
Where are the opportunities for you right now, Gilda? Where are you seeing the need for your services?
Listen, where we're seeing the biggest pockets of value are in markets like New York City, right? This New York has just gotten beat up, you know, in every single sense of the word during the last 20 so months. And so, you know, there's an opportunity right now for investors to look at hospitality real estate in this market, to maybe redefine that guest experience, as you were talking before, in terms of technology and CapEx being invested in these properties. And now that international travel is back, we will finally see a recovery here. There are other markets that are just, you know, they've been performing very well during the pandemic that are just going to perform even better. Take Miami as an example, which is a booming town. The international demand that will be coming there, that's just an enhancement. But I would say in terms of value for your dollar right now, I would be looking at companies that have an exposure to maybe corporate cities, very heavily reliant on international travel. You know, those are obviously dragging behind. You know, prices are still very attractive, and these are cities that are not going anywhere. So the lights are being turned back on a dimmer, but they're, you know, being turned back on. And so I would say those are the greatest pockets of value at the moment.